We were incorporated on 11th of May 64. We are a Niratna category 1 company under MOD. We serve 4 sectors of economy. Yeah. Defense and aerospace, mining and construction, mainly rail. And our equity benefits, government of India about 54%, and 46% is based. Last year, our business combination was like this: MNC contributed 50% of our sale, rail metro 27%, and defense and aerospace 23%. This is how the major products BEML has introduced over the years, from inception almost in 1964 till now. 1964, we started with rail coach manufacturing division at Bangalore. We called that as Bangalore Complex. It was, basically spin off from HAL's HAL. HAL division, the earth moving division was spin off as a company. Then we have moved on to earth moving equipment at Kolar Goldfields, which is around 94 kilometers from Bangalore. And in 86, we ventured into high mobility vehicles, mainly we supplied to Indian Army. And then BMP transmission in 2000, we have manufactured ARVs, armored repertory vehicles. And in 2003, we ventured into metro cars. We started with RS1, rolling stock 1 of DMR, Delhi Metro. And now we are at RS15. Most of the metro orders of DMRC have been backed with demand. Subsequently, in 2014, we have ventured into missile surrogates, and in 19, one of India's biggest mining equipment manufactured only by BEML. That is this what you are saying is the 1800 class electric excavator. And 2020, some of the AI features we have introduced in our equipment, and 21 driverless metro, which is running in Mumbai. The Mumbai line number 217, MRS1. This is the driverless metro. And 22 with IIT Kanpur tie-up on UAV we have manufactured. And 23, this we have supplied rail grinding machine, which we have supplied to Loram of USA. In turn, they have supplied to Indian. 10 rakes of RGM machine order we got. 6 we have completed and 4 are going. This is how our network is. We have 4 manufacturing complexes, one in KGF, another Mysore, then Kolar Goldfield, KGF, Mysore, and Palakkad. And we have around 12 regional offices situated in all over in the nation, 15 district offices, 2 defense space division, and 7 activities. These are all spread across India. This is some of the major products of BEML. High mobility vehicles, then ARV, like that. Okay. These are the major accomplishments of BEML. In defense business segment, 8,850 high mobility vehicles were supplied and 350 ARVs, then military wagons, then pontoon bridge system, 6 sets we have supplied. And under MNC, we have supplied till now 33,100 MNC equipment. And engines from our engine manufacturing engine division, we supplied 28,100 engines. And in rail metro, till now we have supplied 18,000 rail coaches, and which included 970 EMUs and 1,850 metro cars to 4 or 5 metro corporations: Delhi Metro Corporation, Kolkata Metro, Jaipur Metro, Mumbai Metro, and Bangalore Metro. Now we have supplied. And as far as exports is concerned, we have exported till now to 71 countries. The last one we have added in current year was Somaliland. One of the MNC product we have supplied. And that total to 6,300 crores. This is our global presence. We are there in almost all countries. Export figures are given down, which was 62 crores in 1920. Last year, we have exported 830 crores. This includes deemed exports, which we are supplying to Mumbai Metro. MRS is a deemed export project. And in half year of current year, 347 crores with that. This is the shareholding pattern. It's most of it, you may be aware. Government of India holds 54% and balance is. These are some of the key highlights. We have compared with September 22 as well as previous years. You see market capitalization, last year September we were at 6,184 crores, we are at 9,653 crores because share price from 1,485 crores has gone up to 2300. Now it's 2,500 today. Manpower, you can see we are at 4,977, near to 5,000. We were at 5,000, 6,053 numbers in 2020-21. Mostly because of superannuation, retirements only manpower comes down. And the gross margin, current half H1 we are at positive 1.3%, which was actually minus 0.8 from last year September. The thing, so through you can see the sales through competition mode. We do around 65 to 70% of sales through competition mode. In the last one, you can see the green energy for capital consumption. 95% of our energy requirement comes from our windmills, which we have installed in Karnataka and some places. These are the sale, only from sale of products, half year. We are at 1% more than last year, but H1. And this last March figures only. Current half, 43% came from my MNC, 16% from defense, and 41% from private. The value of production, we are at 1,423 crores. This is the order book. Order book, we are at 12,743 crores in that. It was 8,800 crores last September. Gross margin. September 22, we were at minus actually, now very positive. Manpower and manpower, we are at 4,977, it's around 4% reduced compared to March 23. Letters, we are down by 6% in September 23 compared to September 22. These are some of the parameters: inventory, employee cost, and finance cost. Employee costs were up first 6 months, 415 crores. Finance cost, we have incurred 21 crores. That's all I have. Thank you.
Thank you very much. I think we are really happy that and really thank you for coming on us and thanks for investing in game. First of all of you. And I think we also not letting you down. I think till the series of comes, we can have anything to ask some question. That's something.
Can you speak on the mic if anybody wants to ask a question, please?
Hi, so this is Rohan Bora from Imaging Academy. Thank you for taking out the time today. So my question is around, so you mentioned that order book around 12,700 crores as on date, and you expect to end the year at 17,000 crores. The addition being from iron and some of it from the mining. So for defense, as I see today, the order book is around 5,000 crores. And just wanted to know what are these products, briefly, what are the top 2 or 3 products, how much is the capacity that you have, and will that be sufficient for this 5,000 crore order book that stands today in defense? That is the first question.
Yeah. Thank you very much. See now, the one thing is that our company is in a very important sector as a research and growth is concerned. We have 3 vertical: mining, construction, rail investment, defense and aerospace. That should everything is being growing now. All the 3 verticals are fine because government has put in tremendous stress. So, and again, I consider here, if you look at the verticals what we have, we got railway and metro, defense and aerospace, mining and construction. So basically, if you look at the 6 different streams are 6 different states. Now, if you talk about defense and aerospace, now if you look at last 3 years, we did almost 300 crore to 856 crore we have taken. This year also we are working to have a growth of not less than 30 to 40%. Order taking defense stand today 5,000 crore roughly. And now here how we have divided the defense segment, how we are focusing it, I will just give a brief. Now the first segment is HMVs, high mobility vehicles, which we are supplying to Indian Army for right from 1986. Over 9,000 equipment are working. All the major platform of Indian Army, be it the missile system, be it building system, be it the command post vehicle, be it the radars, everything moves on our vehicle. There is Akash, Pinaka, Agni, Prithvi, BrahMos, everything. And the government industry tremendous thrust in the defense sector. So order booking is huge now. Anticipated order booking, which is going to happen because now a lot of new regiments are getting created. So there's a lot of also HLVs in that. Second segment which you are focusing on the armored vehicle section. Armored vehicle, we have supplied over 350 armored recovery vehicles. We have supplied Arjun recovery vehicles. So there are a lot of opportunities are there. Arjun Army again because government of India has raising 2 regiments. So there is a requirement of recovery vehicles. So there is again another sector which we are working with strong. Third area we are considering the aggregates. This tank has to be serviced. It's in transmissions, BMP transmission, a lot of things are happening. So aggregates also is on the rise.
Sorry, what is it?
Aggregates, components. So that's the third area we would see. Fourth area which is very important in developing is that for the overhauling and AMCs. Now having 9,000 equipment, 4,000 equipment are due for the overhauling. 350 RVs are due for the overhauling. Well, BDR important customer looking for the AMCs. To that area, we are focusing because we are working for the ARV overhauling 350 numbers. It happens that it will happen over a period of 6-7 years. But everywhere I can do 25-30 numbers, something is a huge opportunity. Now, another area which we are working very much focused in the new products. See, for example, a lot of our import substitutes happening. When government is a person they want to purchase to the local domestic sources, so a lot of new opportunities coming. Earlier things which were imported from Russia, for example, trawl, minefield marking equipment, mine barriers, mine layers, demining equipment. Everything now has to be done in India and we are participating everywhere. So that's another new projects are coming up in a very big way. ATV, articulated artillery vehicles, RTFLT stuff. So a lot of new areas we are concentrating. Aerospace, again we have 30 crores to 500 crore plan we have. Navy also we are entering in the marine engine. So what I said, the defense aerospace business is got a huge opportunity. I am looking for defense business to grow at least 30 to 40% or per annum basis. Order booking must be go much higher. So there's no dearth of orders in defense.
About your capacity, or would you need more?
See, now 300 to 900 crore we have taken. Now the whole company, resources we are utilizing. For example, we do now trucks in KGF, Colorado, and plant. We are doing trucks in Brazil also. Not only in Palakkad, which is different project. So we are just trying to utilize and with one thing. I mean, capacity carrying agents to resources inside the resource utilization. The second thing, we are doing a lot of insourcing, outsourcing. So this idea, I think, up to 1,000 crore, 1,200 crore, we should not have any issue on the defense capacity.
And the RV vehicles that you mentioned, is there any update or status on that? I think it's been pending for a long time.
Which one?
The ARV vehicle.
Yeah, very good thing happened. Now we have sorted out ARV problem. We are manufacturing now fully indigenous ARVs, which are going to give it to a company to about in the span of 12 months. Will give the 2 ARVs. And now further quantity will happen depending on these 2 ARVs what we go for the trials. So that project is on now. We resolve the issue.
And where does the tractor truck and all of those coming from? Even this.
Starter takes a big part of HMVs, high mobility vehicles. This is a starter truck.
That still continues to be a very high component.
HMVs, see now this segment what I talk about around last year if you say 60% for HMV, 40% armored. But in the future, HME will be 30%, armor will be 30%, rest is my aggregates and new. So that's a thing will happen.
So you produce the HME 30%.
Armored 30%, HME 30%, armored 40% will be the new projects. For example, Brazil, mining equipment, demining equipment, aggregates, AMCs.
Will be the revenue for the order book. This will be the revenue mix.
Revenue.
So sir, already the margin will also be on an improving trend for this division as a whole.
We hope, definitely we hope. So because indigenization is massive from government of India. And of course, indigenization, yes, it has got its own thing, takes a lot of development charges, but definitely the price costing will be lesser than what we think. So I expect margins to be better.
So what will be the rough margins currently?
It will be, see, this difference margin is you cannot know, even if I get nomination basis, even the government of India, that's got their own mechanism to have the cost committee, assessment of the pricing and fix it. So if they say that it can happen 2.5% to 7.5%. Certain cases, no, they give the spare parts 2.5%, also they give a to 10%. So that's the margin.
This is EBIT margin or EBIT?
I'm talking about this is EBITDA margin, no, the
Product margin,
product margin.
Gross margins.
gross margin.
And sir, given the order book is 5,000 crores and efficient we are saying that will be like 3,100 crores. So the entire order book, this order book will be executed over 4-5 years.
This order booking in 3 years into 4 years.
And what will be the pipeline in the sense that what you are seeing will be the ordering flow going forward in terms of overall?
See, order, see, for example, breathing system, what we executed from the research, now another pipeline 30 numbers is floating out. So that I'm expecting that should be closed this year. Then Armored, Arjun Armored recovery. So I'm expecting 2,000 crore order definitely this year itself should
How much, sorry?
at least 2,000 crore this year. And then the big ticket project which we are working along with our industry partners, along with collaboration, along with notice, that no, that's in the completing mode. 60% must be to the completed mode. This is the future. For example, the TCA overall. That is all able to be the completed mode because government is open for private sector to come in. And we are the best, we are the company best poised to take this order. If you are basically pursue, probably that is a huge order, major on 20,000 crore. So it depends how you
Which order?
overall, TCA overall.
That will be over a multiple.
Yeah. See, difference, all orders will spread to long 5 years, 5 years, 7 years.
So who provided those tanks? E-72. We bought it from Russia.
This is Russian tank. This is supplied. Population is, I think today more than 1,800. All because of our invasion, the ports are not coming. This is opportunity for us.
We have 2.5 and 7.5 gross margins. So in this diluted, every segment diluted because other segments do they do better margins in this segment?
Though this I just say that margin is lesser, basically the government in India sometimes they see some the spare part they give for 5% or the 10 spare part, manufacturing they give 10%. So that is very rich. I will not say because will have the better margin than the other competitive product in the company. For example, this if you participate in the metro, what is very much competitive. See, this our difference with the China was hardly 0.5% in the metro business. So that is very competitive. The margin is the difference more or less good margins. And that means we can achieve 2-digit also.
And so usually peak turnover you can achieve with this capacity is 1,200 crores.
No, what I anticipate that presently the level of utilization of the resources which you are anticipating. See, after 30 lectures, we are utilizing the resources. We will be able to achieve that kind of a turnover easily. But this year we are investing for our money in CapEx. That's spending our capacity. So the future will be down the line 1.5 years. We can move to 1,500.
So how much capex are available?
CapEx we have done this year, I think we are planning around 350. But the defense, as such, you cannot say because the facility will be used both by different companies.
So 3 months ago, we talked about doubling our turnover, then 3 years.
We are, of course, the chairman, like, as far as I feel, yes, we are.
But if we see the potential is huge, but we need to, we all are expected to see that something in
Maybe we are in a, maybe in the position that within 2 years we will do that. One will not wait for the 2 years.
But for that, I mean, we are not employing
So number of employees, we got a plan to hire more number of people, because the turnover has to go, the people are retiring. We have to have people at the right places. To continue. So we have to get people, so we are in the process of engaging more people. And we will ensure that that should not become an interest in our growth. New skill sets are required in certain areas which we are doing it up. We also know that companies, the people are, 4,000 companies happening. We are on the ground.
Should we expect that your employees which have been really for the past 20 years because of the older employees retiring and the VRS and all that was happening, that is now over and yes, not over, the regular problem. No, so is 5,000 now like
Up to that extent, see 25% people will go out in the next 2 years.
Right.
But then we will not be engaging 25%. We will fill up with the different set and maybe more skillful, maybe less number of people. That will,
so this 5,000 can go down to what, 4,000, go to 3,000.
Even for fresh recruitment, already advertisement is there.
Yeah, so that's what I'm saying, net it will still continue to reduce the employee base.
Yes, to reduce to the extent of requirement.
Of course.
So if our turnover starts increasing, definitely some more recruitment.
So with that 7,000 or crores, like we're doubling in 3 years or 2.5 years turnover number you're talking about, what kind of employee needs to anticipate?
see presently, if you look at the present job and the kind of plan we have, we feel that we will, the present capacity will able to deliver to you around 5,000.
It's same capacity.
With same capacity better. After that, we definitely need to hire people. If you are on the path of hiring.
That would mean more efficient operations and also improvement in profitability.
Yes. We have to hire people, certain scale.
And so what is your margin outlook overall? At a combined level, because in some of your earlier calls, you said that the employees have going down, there will be a significant, there will be an improvement in margin. And then there will be operating leverage continuing because your turnover is rising substantially. So overall, can we expect this 10% margin that you've shown last year to go up to about, say, 30-40%?
No, 2 digits will definitely we feel it will happen.
Okay.
2 digits, so definitely the margins will happen.
Yeah, see, margin definitely will increase. So when you talk about the reduction in manpower, the reduction in manpower will no way help us to increase our profit. Right? It's a what we can say the last 2-3 years and further 2-3 years, like manpower will reduce because this company is now it's quite good. If you see those who joined in the initial stages, now they are getting superannuated, right? So now what we are trying to do is, so the efficiency level has to increase. So in this type of industry, generally, if you see the requirement is 15 to 17% should be a wage cost, right, of your turnover. At present, R is slightly on a higher side, but it doesn't mean that the reduction of manpower will bridge the gap. So manpower has to increase, but only thing is the efficiency and productivity has to increase. That's what we are telling. If our turnover is doubled in the last 2 years, and further increase in the range of 15 to 20% year on year. So definitely based on the higher turnover, while percentage of wage cost will come to that extent, may not 15, 17, somewhere near less than 20%. So that's what we are taking on.
So, overall, when we look at our margins, we see the improvement in our margins, right? We think it will happen. What can our margins actually go to? Like, every business has certain margins that you can achieve, right? What are the optimal margins?
See, we are having three unique businesses and all three having a different line of execution as well as the bottom and top line. If you see rail and metro and defense, these are time consuming contract, means the contract will be over or it takes minimum 2 to 3 years. And mining construction and to some extent small orders of rail as well as defense can be converted within 12 months. So our strategy is first we have to increase our turnover. We have to get few big ticket orders, which will continue for another, say, 4 to 5 years, right? So that my manpower will remain engaged. Then, because there the problem is in metro, we cannot have our own margin, right? We have to compete. It's an international competition. So definitely margin to some extent will be less. But on the other hand, if you see, if volume increases, we still can maintain. Now what we are trying to maintain is our fixed costs, including our employee costs. We are keeping to certain level. We have put checkpoints. It should not be more than this percentage. So once my production or turnover will increase, so this fixed cost element will not increase in the same level, right? So reduction will be there. So that reduction, cost effectiveness has already been started. If you see result from the previous year to this year or previous to previous year, so that has come to some shape. But overnight we cannot come to that level. So slowly we are building out that level. Yes, EBITDA margin or gross margin will differ in each segment, right? Somewhere it is high, where it is low, it can be made up with the volume. Right, where it is high, we can still take some risk. Right, risk in the sense to grab some orders, to show our visibility in the market, we may reduce our margin. But overall, our expectations are we should not come down below 2 days.
Can you explain the margin difference across segments? Like
it's difficult because it's a totally what do you call product based, right? Sure. So, like in our KGF unit, we are doing both defense as well as mining, right? Even rail, we are doing in defense unit, that is a Palakkad. There, we are doing some portion of the rail aggregates also. So it's altogether mixed. So identifying it's a difficult because the same manpower, if work is not there, we can shift to other one.
That is what.
So overall, we have to see. So though it's a three unique,
right. What I'm trying to understand is, can the texture of your business change a little bit away from competitive bidding? And as the defense business scales up, can the margins in the defense business be significantly different from your previous margin?
yes,
If they 2-3 years down the line, can the defense margins be mid to high teens, and that can change the overall texture of the margin?
yes, definitely. That's what I'm telling you. See, defense, okay, why? Because customer is more or less same. One customer is there, right? If it is the contract tender base, we can quote margin as per our wish. But if it is a single or it's a nomination basis, then it will be based on the cost study done by the customer. They take over the entire cost and then they add the margin and give to us. So that means no order will go in loss. Only thing is margin percentage may vary. Right. So defense, yes, the volume will increase with the same fixed cost elements. Our bottom line definitely will improve.
But these RMDs and the HMBs, they are on a nomination basis.
Some orders are.
Some orders.
Some other orders we have to participate to tender. Though we may be the single bidder, but we have to follow the tender procedure.
Sir, on the metro
In H1, your capex is roughly 40 crores. You mentioned 350 before that. And yearly, we were doing 50-60 crores. So, where is the rest of the capex coming in the second
The
half?
40 what you are saying, that is some spillover from the last year. It has come, but this year, by the end of this year, you will see a drastic increase in that.
And where will this capex be?
So 350, we have already allocated the fund to that. So it slightly here and there may difference may come, but significant improvement as compared to previous years will be there.
Towards manufacturing capability.
Towards my see for KGF, one of the plant we are enhancing our armored facilities. One plant we are increasing our
Even hangars we are constructing.
somewhere we are doing for the metro hangars. So a lot of other three vertical capex are doing.
Wherever immediate requirement is there. So there we have spent. So next year again we'll go review and we'll further increase our capex.
Sir, on the metro side, what is the annual demand for, general annual, how much metro coaches are ordered versus the capacity currently in the industry?
Demand difficult to find out. There are so many cities, the study done by the government side or the metro corporations. Requirements are there in two-tier city, right? Like now Patna.
The annual ordering is roughly how much versus the capacity in the industry?
In the industry.
Yeah, because
So where is the industry?
Yeah,
We are the only public sector in India or Indian company. Rest are
not listed, I'm saying, not only listed, I'm talking
no,
about
they're not listed. Nobody else is there. Indian company. Rest all are overseas companies only with whom we are competing. Right. And the again the requirement again based on the tender. Requirement is more than 1,000, maybe 1,500 coaches.
See, if you look at metro, if you say metro, see every city wants metro. Chennai, for example, Chennai, Bangalore, Patna, everything you look at. If you talk about that potential existing, that is unbelievable. More than 1 lakh crore, they show the kind of metro and railway progress requirement in the project which has come up 1 lakh crore. That all we put together, in Vande Bharat, you say we are also making Vande Bharat. So Vande Bharat, then your menu purchase, another order for the menus, and then OG cars, and metro there is a huge potential. Huge potential. And there itself, one big ticket order, if you get, it will be, for BEML itself will be more than 20,000 crore.
No, the demand is more than the capacity, then why are the margins kind of on your lower
See,
side?
now, see, if you look at the manufacturers in India, earlier people used to compete very hard, and there was a very tough competition. Now, Alstom, Bombardier, Titagarh, if you see, capacities, everybody has got capacities to the, the competition price wise. I feel now the people become as sensitive. It's not a cutthroat kind of a competition, and they are raising their bar. So with this kind of understanding which has come in the market, the pricing metro price I feel is going to give the better margin.
And what is the current?
If you see metro coaches which we won in the Mumbai and we become L1 and defeating even Chinese by 0.5% difference. Neither said China. So that was the thing. But now you see China is not there, and now this all Indian over the part making in India or maybe Assam or party everybody. You got an order now. I'm feeling the prices are improving, so that definitely will be the better margins.
How much have prices improved over?
Now we feel that L1 and L2 prices definitely I found is the improvement path.
And what will be the current, or like in the current order book, what will be the share of the metro?
Now we got 13,000. 5,000 is different.
5,000.
6,000, 7,000.
6,000 roughly is our metro.
6,000.
No, recently we got this Bangalore metro. Approximately 3,700 crores. So that's why it has gone.
Total will be 6,000.
Approximately. Order in hand out of 13,000.
Okay, and 5,000 is difference.
4,600.
And this metro orders will be executed over what time frame?
See, the proto takes minimum 18 to 24 months. And after that, the month we can supply 18 to 22 numbers.
Our capacity is 250.
Capacity, if you see our capacity is approximately 300 per year.
One per day.
Per annum.
But I am.
300 per day.
It can be increased because sub-assemblies we can do in other units also.
And here you think the margins would be better than what you saw in the past?
Where
These orders?
Metro.
Yeah.
It based on the competition. Highly
Yeah,
competitive
yes,
market.
because you have got the order, that is why I'm asking. The competition, you know, right? The pricing is already done.
Very correct. If you see the last time, the competitor quote rock bottom price, and this time they quote very high price. So it is again their requirement. If their plant is full, they quote very high price.
This is very peculiar happening.
Peculiar
Same thing, I was won the contract, I want the review part, the next tender is price, what is quoted, you cannot, very high price. Because it all depends on the, they never want to take the order because they are so. So I think, but now more or less, capacities are. I think margins will be good. Now,
So what is the valuation in the which is what part manufacturing side?
see the entire metro coaches complete that sheet metal job, the top structures, boogies and everything. We are taking only propulsion. The propulsion system we are taking. This everything we do in India.
That is the creation.
No propulsion we are taking. Rest everything we got a full place factory where we got a different markets and picture meeting the under frame, the side frame, top frame, the boogies, everything we got.
20% will be 20%.
Almost.
What is Vande Bharat?
The Bharat, we are making the sleeper. The first in the country, we are moving. We got the order and we are executing it. We'll be the first person to roll out the Vande Bharat with sleeper.
Last time you said that you're also expanding metro, looking to expand, probably not in 24, maybe 25. So, what is the update on that?
Work is on now. You know, the efforts are on.
And is that a greenfield or a brownfield? Is the structure ready at low capex for maybe high capex?
So I think we can consider the ground.
Moderate you can consider. Already we are having, we have to increase another line or another line.
Okay. So it's just putting another line the same structure.
That's it.
Next to earlier, some Vande Bharat potential should be very similar. So they improve from our end, market share will be
Also, we get the Vande Bharat because now we got one order along with ICF. ICF they have to manufacture. Now they have given some portion to us. Design development. It's a design will be ours and manufacturing will be ours. So some of the aggregate they are supplying it free of cost. So once this will be through, definitely similar orders will come and further orders is based on the railway, their plan, it will come. But definitely future is of Vande Bharat. All trains, more or less, the existing coaches, they may replace with Vande Bharat. Like of the coaches.
there is talk about the platform will be for metro coaches.
Metro coaches.
Similarly, Bombay also they talk about.
So Vande Bharat, you can say metro and conventional coaches is in between.
This is a different line. The Bharat is 60 is around high. Interest is low.
Sorry.
We just have presentations and small discussion.
Welcome and thank you for investing in BEML. Please carry on.
We are actually
Talking about Vande Bharat.
Yeah, so this thing about Vande Bharat, we plan to launch first people in Vande Bharat. 46 years, the order is very strong on that side.
See, government has already planned the 800 Vande Bharat, 2030. And we are already manufacturing the first sleeper train in collaboration with ICA. We expect to roll it out by January. Once we got the photo, the first sleeper by not by January, sorry, by March. Then within a span of another 12 to 14 months, we'll be closing out the balance of 9 trains. Right, we'll definitely give a one day, the first mover advantage to the order, and then we'll be better prepared to, compete and participate in the future tenders that are going to come out in the phase now.
Sorry. I mean, this area will become much bigger than currently maybe by around that.
Yes, looking at the opportunity size, the opportunity size is more than 2 lakh crores in the next 7 years. So definitely as the projects get certified and analyzed over a period of time, definitely the railway and metro business will grow substantially. Other product is there, and other variants are there, ACA news are there. The one the metro is there, the metro trains are there, the rapid train is there. I'm not considering the rapid train industry that routes. Mostly it is the commuter rail, mainline commuter rail, as well as the metro, the urban movie.
And the capacity for one day sleeper will be the same, will be the part of that metro coach capacity of 300, or it is different?
It is different. We have the metro coaches are basically standard gauge. So we have a different line for the metro. And for the mainline trains, for the EMUs and for the commuter rail, they are broad gauge. And when they work is broad gauge. So the capacity will be, the facility which will be used will be different.
What is the capacity?
But our inherent capability of manufacturing stainless steel coaches, which we have gathered over the last 20 odd years by manufacturing metro coaches, this is coming very handy. This is coming in very handy. Already the manufacturing process, the manufacturing has started. The car model has started.
So what will be the capacities of these Vande Bharat coaches?
Capacity means the seat, the passenger capacity.
Yeah.
Passenger.
No, not passenger, factory capacity. Like metro coaches, we have a 300 per annum capacity for Vande Bharat.
That we have not yet planned.
Okay.
You see, depends on the ordering. Each Vande Bharat is having 16 cars. So I believe with the present capacity, we can come out with now, since we are at the very initial stage of building a sleeper car. So what we have planned is maybe one train set every month or every 45 weeks. Once the program comes in.
9 to 12 train sets per annum.
But once we really get into the thick of things, and we are quite familiar with the manufacturing, then we can scale up.
Mining as well as increasing their productivity. What would you see that as an opportunity for us?
You see, in the mining companies, we already holding and hold subsidiaries. Countries of all and for there are two ways in can work. One is the departmental acquisition. Coal India has a plan around the line, and then some of the equipment Coal India directly sending out in the exchange. But 80% of the being under the subsidies. So that is called departmental acquisition. The other ways, which is becoming more and more prevalent now, is the Indian. That is the money development operation. Coal India is giving a tract of mine or particular mine to an NGO. In some cases, they will facilitate, in some cases, they will not facilitate the land acquisition or the local statutory clearance. So everything has to be done by the NGO. And they are paid based on the per ton of coal which is produced or extracted. That is an MDO model. So in MDO model, basically it's the MDO which will decide what it can be. Coal India has got nothing to do with that. So as far as the capex, enhancement of capex is concerned, it is good news for us. Especially you might have heard about Coal India or the Ministry of Coal saying that there will be no imports from the high-yield mining equipment. So that always will for a company like us because we are already now in the process of developing and we have already developed some of the high-yield equipment. There are basically five equipment which are required in the open cast mine. First equipment is the excavator or the rope shovel, that is for digging, right? It is all basically overburden removal. Second is the bulldozer to move the stack. Third is the excavator, sorry, the dump truck. Good enough, dump truck. Third is the dump truck. Okay. Fourth is the motor grader to level the field.
Sorry,
Fifth is the motor grader. And then fifth is the tire handle. The tire handle is required because there are some wheel equipment, there are some rod equipment. Rod equipment, it will have a chain type movement like it be on the tanks. Bulldozers and all, they are all roller dozers. And there are some wheel dozers. The dump truck is a wheel equipment. The water sprinkler is a wheel equipment. So all these motor graders are wheel equipment. So there we need to have a tire handler which can handle the tire. So right now the tire handler that we are manufacturing is a 3-ton tire. But when we go for higher end mining equipment, for example, we have already developed the 880 horsepower motors, 190-ton tire. For handling the tires, we need an 8-ton tire handler. So that is under development. Apart from the 20 cubic meter of shower and the 550 horsepower motor. So these 5 equipment, they make the bulk of the overburden removal and the extraction of coal from open cast.
Can you have a nasty question? We have another meeting.
What is our share? How is the competition in this small sectors?
Competition is for growth and we always help in competition. Our competitors are all the BMs from Japan, from Europe, from USA. We are pretty comfortable. We are competing with them in all the segments. We are not getting any orders from American but we are competing. And also it's reverse option. So it's even more difficult, even more tough. But we have got quite a few orders in the last 15 days itself. We have got some big orders for dump trucks, for water sprinklers, for bulldozers, for the 60-ton dump trucks. And more of such are in the anvil where we are already L1 and we are about to get the order. And some of the bidding is going to happen. And maybe in another 2 months' time, it will be decided we will get the order. But we are in a position where we can execute the majority of those during the current financial year. Because mining, we have a different concept. We have the concept of a production plan. Based on the plan of the mining companies, as a non-program, both full and non-program. And we take advance action based on our reading of the situation, based on our analysis as to what is going to be our order booking trend, which equipment we are most favored to get. And where the long lead time items, they take more time in procuring. So if the cycle is 6 months, 8 months, 1 year, so we take action almost a year before. For example, the 24-25 action, we have already started initiating as far as the mine is concerned. Because we know what is the plan, we know what is our capability, we know what is the market size, what is the market price. So based on that, so what happens is as soon as we get the order, maybe within 2 months, 3 months, in some cases, within 50 days, we're able to do the same.
What quantum of orders you can expect from the private miners? Like, rough.
You see, private miners, I cannot try the number because mostly as of now, the private miners are not doing the, they're not developing the big mines where the high-end equipment will be required. They are mostly working in smaller mines where they require equipments which are common to both mining and construction. Now, when it comes to the construction segment, for example, the motor grader, a smaller motor grader is used in the road construction also, it is used in a smaller mine also. So there, literally, there is no need maybe for the private player to purchase a new equipment, and they would rather go to the second-hand equipment.
In your new press for bring it along in 3 years, as we stated before, which is the division you will focus on descending all of them, so as to ensure that your as goals are target. And the related margins also. How do you see that behaving? Will there be, a reasonable operating leverage given the huge bump up?
You see, first is that doubling of turnover will really happen or not. That is to see. 3 years is a very small time. What I can say is that we are aspiring to grow at 20% per year. And with that, presently our present turnover is around in the range of 4,000. And we crossed 4,000 crore only once, that was in 2021. Sorry, 21-22. After that, there was a dip by around 7%. So if we grow at 20% year on year, then definitely one milestone is equal to 5,000 crore. The second milestone is 7,500 crore. So in 3 years' time, we definitely look to crossing the 7,500 crore. So that is near to double. Whether it will be exactly double or more than the double, that only time will bring. The key growth drivers for us are the fastest growing sectors are one is the rail and metro, the second is the defense and aerospace. Mining will continue to grow. Mining will continue to grow at maybe 5% to 7% year on year. And why I'm saying 3 years, because for example, the Bangalore metro, the order which we have signed in August, in 80 weeks, 96 weeks we are supposed to come to the first people. We are trying to expedite that to 80 weeks. Once that is done, we go for the bulk manufacture. So 3 years will be the time when the maximum manufacture of Bangalore metro will happen. And by that time, we are able to get some more track machines, some more EMUs, and some more Vande Bharat. So that is the time when we can maximize our revenue from the link. Similarly for defense, already we are working on quite a few defense opportunities, which are going to fructify maybe another 6 months, maybe another 12 months. And after that, there is a time for FOP. There is a first of production clearance, which is given, and the bulk production clearance is given based on that. So that will be the time when the bulk production will be given and we will be in a position to manufacture and roll out all those equipment. As far as the margins are concerned, you see margins are, firstly let us understand that in a capital goods manufacturing company, margins are very tight. Only everyone work in single digit margins. So in spite of that, we have almost reached double digits as far as the detail is. This year I expect that we will reach the double digits. We will improve upon the figure by 200 basis points. And someone asked me a question earlier also, that do I look at having a big time the late teens? So my answer is no, I don't look at it that way. Maybe even if we are able to do around 13% to 14%, that is pretty healthy for the industry that we are in.
13-14% EBITDA is achievable in say about 3 to 4 years time when all the engines are really
Absolutely. It should.
And in terms of any area in terms of manufacturing power or any other specific area of improvement, incremental capex
so it's not incremental, I would say, it is a substantial capital that we have put. And the capital that we have put is for three things. One is enhancing our capability in defense, in radar metro and in EV. Number two is upgradation of the existing machinery, the plant and machinery. And number three is civil works. Some critical civil works we had to do to take care of our quality also, like paint shop, like computerizing roads, giving I mean, those are the critical things that we have to do. So that's the reason we have infused around 50 crores of tablets this year, which is almost 8 to 9% of our last year's sales revenue. And if all goes well, next year we would like to further enhance by around 40%. But after that, I understand that we don't need to infuse further capital, at least no further major capital, at least for the next 5 years. Because during that time, maybe we need some incremental capital to take care of our, replacing some of our machines, going for some new facilities. So it will be incremental. For next 2 years, the capital, whatever we infuse, it should take us through the next 5 years.
If the positive of time, we have last question.
Could you comment quickly on your net working capital side?
On the
Net working capital side.
net working capital cycle, I can comment on the working capital. I didn't understand your question. Maybe Director of Finance can answer this.
See, working capital, if you see now, last year, we have a reduction of working capital to 13% working. Right, so working capital will remain more or less in the same level, even though my turnover is increasing to the tune of 10%. That's what I'm saying. The once my turnover will increase, the number of days will come down. Level will remain down. In absolute terms, it remain the same. So then number of days will come down. So it will not increase.
If you look at our working capital, it's in the range of around 3,800 crores. Right? 400, it has been hovering around that range. So, with that kind of working capital requirement, I think we have to grow our sales revenue. It will be pretty odd. So it will be take over with the working capital, we will be saying absolute terms. It will be, I think, it will be quite good. Our aim is to grow by at least 20%. We have the orders. We have the orders, we are focusing on the execution. Now, the two business particularly, we are doing other plans to achieve that kind of thing.
So you said that 200 basis improvement in margin. Is that you close the year on that or the year expectation?
I didn't understand the question. Last year we closed the year at 9.29.
So the
So even big swings, it should be around the level.
full year margin. Okay.